So today, our three panelists will be Alex Agut from Handcash, Mike Hennessy from Unbounded Capital, and Kurt Overley from 16 Points. Kurt, how do I pronounce your family office's name?
Coruscant.
Coruscant, from Coruscant today. So I think without further ado, I'm going to let each panelist introduce themselves for maybe 30 seconds or so, and then get into some of the questions. And as a reminder, if any questions come up throughout the panel or you have some now that you'd like me to ask our panelists, feel free to drop them in the chat or DM myself. So thank you. And Alex, how about you start us off?
My name is Alex Agut. I'm the CEO of Handcash, and we started Handcash because we saw that crypto was super complicated and not very useful. So we decided to do something about it.
Very succinct. I love it. Mike, can you tell us a little about yourself?
Yeah, I'm Mike Hennessy. I've been in Silicon Valley 3 decades, background in enterprise sales with companies large and small, and investor as well, angel investor in a bunch of companies, and some experience in Latin America, and have been limited partner, investor, advisor, investment committee member for Unbounded Capital.
Thanks, Mike. Kurt?
Yeah, hi. I'm Kurt Overley. I'm with the family office, Coruscant. My background is I'm a ex-quant, went to Wall Street, early 90s, spent most of my career on various options trading desks. Thanks,
Kurt. So I'm going to get started with some of the questions I prepared in advance of this that selfishly, I just kind of really want to hear what everyone has to say here, which is I think the big question that I often get asked at Unbounded is some version of this, which is, how do we get from, what we're investing in, focusing at Unbounded Capital now, investing in scalable blockchains? How does that go from being the kind of contrarian bet that it is today to the consensus view of blockchain-focused VCs? So anyone feel free to jump in here. And, for this question, I might weigh in a little bit myself as well.
I'll jump in. I'll just be quick. I mean, it's money driven. So simply put, I mean, if you have companies that are raising money at higher valuations or getting acquired or eating market share from the traditional companies, and for me, I'd say like 100 million plus valuations. If we have 3 companies in BSV that are 100 million plus consumer and then some enterprise adoption, they start to pay attention. Now for a full scale like shift, I mean, obviously it has to be a lot greater than that, but if money's being made and companies are making an impact, investors will pay attention.
Well, Mike, let me just add, we actually already have that today. There are over 3 companies worth over $100 million where BSV is a major part of the tech stack. One of those companies was, earlier this year acquired by Moody's for over $100 million. So I think we've seen that. And, obviously from our vantage point, we've seen, I think, greater interest in the BSV ecosystem, our portfolio companies, since that happened. But it still feels like a pretty contrarian bet today in terms of their reception.
Yes and no. I mean, 2 years ago, people in this traditional Silicon Valley venture would say, BSV, what is that? That's a scam.
Yeah.
A year ago, oh, that's interesting. Talk to me when you're real. Just this year, I'm starting to see more interest in multi-chain approaches, and people are starting to ask me about BSV. That never happened before. So it takes time. It takes time for these investors to sort of understand the dynamic. And there's so much FUD going on and information out there that's just, it's hard to sort through it. It's really hard to sort through what's real.
Yeah, and that's fair. I mean, it took us years, so. Alex, what are your thoughts, especially from the consumer angle? Are you seeing a difference in the users from Handcash and how they're treating this question?
I would say that once you are reaching bigger and bigger audience over time, it's very important for your systems to be very scalable, so you can serve all the demand. And right now they don't have this kind of pressure, like the Coinbases of the world, whatever, because they handle very few payments per user per day. And basically it's all database entries. So they're not really using the blockchain much. But if you start using apps and games, especially we are focused on that, and apps and games, once you start seeing the power of microservices or pay to play, or paper on, to unlock premium content, is when you start seeing that you really need this thing to work, to leverage the scaling of the blockchain instead of building your own system. That's where the efficiency comes, and that's where the efficiency kicks in. And databases can only take you so far.
Sure, but despite all of that being the case, we obviously, share that same vision with you, Alex. This is still viewed as not, a consensus view. So how does that actually, change?
I think it's only a matter of time, to be honest, and exposing more and more people to this technology, and it will be obvious that you have to use this technology the way it was supposed to be used, instead of try to fake it. There are some companies like, I don't like to badmouth anybody, but Strike, you're seeing the Strike basically is like a database, and they use BTC for marketing, but the balance is in dollars. Every transaction is a database record, and they just have some kind of Lightning rails if you want to do Lightning payments, but Lightning is not even Bitcoin. So it's kind of, we are seeing a lot of inefficiencies in the system, and I think the big bet is on building things that are scalable on chain.
Kurt, where do you in here?
Okay, well, this is a super interesting, and frankly, it's a super hard question. I think if you're looking for analogies, I think there are several appropriate ones. One is, I would highly recommend for those who haven't picked it up, is there's an old book by Thomas Kuhn. It's The Structure of Scientific Revolutions. It was published back in the early 60s. It's actually got an updated introduction in 2012. But most people think of scientific progress as being a very linear sort of thing, where there's this kind of gradual accumulation of facts and data and evidence that just kind of leads to kind of a ever expanding sphere of knowledge. But what Kuhn realized is kind of going back and looking at history very carefully. And he's the guy that kind of coined the term paradigm shift, and that is that, and I think this is applicable to both technology as well as basic pure science. But it's what you tend to see through history is you see a bunch of long periods of time with very little progress being made, and then there's this kind of step function change, which involves a real shift of paradigm, which leads to kind of a leap forward of progress. And he kind of spent a lot of time trying to figure out, well, what are the sort of ingredients that go into sort of catalyzing those changes? And they're difficult, they're hard, they're chaotic. It involves sort of a gradual accumulation of anomalies and various types of crises that become harder and harder to reconcile. And there's usually super strong resistance from embedded schools of thought. And often that resistance kind of never completely dies. Max Planck kind of famously said that a new scientific truth does not triumph by convincing its opponents to see the light, but rather the opponents eventually die and a new generation grows up that's familiar with the new concepts. Now, we don't want to wait for people to die, right? Because time is money, but fortunately we've got money sort of on our side. I echo kind of what Mike was saying earlier. We've got things like making money efficiencies and bankruptcies that are frankly kind of in our favor that I think will kind of accelerate the evolution. The other thing is that these revolutions are often led by the leaders of these paradigm shifts are often sort of younger guys who are coming in with a fresh set of eyes, who are not they're newer entrants to the field. They're not blinded by the paradigms, and they're kind of able to escape the mental prison of kind of an existing consensus ideology. So I think we have a lot of the right ingredients, but then kind of, okay, what are the additional, as you've noticed, okay, we've seen a lot of big events. Okay, in addition to some of the kind of pre-unicorns that were starting to grow, it still hasn't kind of tipped the scales. We had the whole Kleiman versus Wright trial, and I think there were expectations perhaps that the publicity around that might shift the narrative a bit. But not to be too pessimistic, but I'm frankly at this point I'm very skeptical that any kind of litigation around any sort of right or the kind of the COPA lawsuit, I just don't think that's going to have any impact on the consensus, frankly. And even if Wright were to actually do the giant, Bitcoin fire sale dump that we're all hoping will kind of eventually happen, although I think we'd all agree that would definitely move the market in terms of BSV, BTC pricing, even that I don't think would shift the consensus. And when I think about, okay, what are the risks? What are the dangers that kind of, first of all, I'm a believer. Like if that's not clear, I'm hugely enthusiastic about what you guys are doing at Unbounded and what kind of your portfolio companies like, Alex is doing at Handcash. That's super exciting. To me, it's the most exciting thing that's happened over my entire investment career over the last 3 decades, by far and away, the biggest potential for disruption. But that being said, I think I perceive a little bit of, to use another analogy, I don't know if you guys are familiar, again, I'm dating myself, but there's an old movie, it's called Field of Dreams. It's a baseball fantasy movie with Kevin Costner. It's based on a book, Shoeless Joe. But it basically, the metaphor from that is, if you build it, they will come. And that's kind of a danger for us, because we kind of bask in the glory of this beautiful technology, and we think, wow, if people just read our Bible, the Bitcoin white paper, and they listen to our sermons, the Coin Geek kind of presentations from the converts like Alex that have kind of moved over to BSV, that they'll see the light and they'll join our religion. But the risk is that, I've also played a role in marketing kind of through various career iterations, and that kind of build it and they will come is not a great marketing strategy. To me, it reminds me of another kind of episode in Technology Wars. Well, anyways.
Kurt, let me, so back to kind of the question, how do you think this actually happens?
I would sort of build on Mike's earlier comments. I think in large part, it's going to be led by VC activity in helping to build the underlying, to build and grow and find the next great companies that are coming up. They're going to become those next unicorns. And that's going to, as the number of companies grow, that will eventually tilt the scale. And the question that deserves a lot of further discussion is how to best make that happen.
Yeah, I imagine, and Alex might tell you, is just get everyone to use Handcash. It's simple, right?
One thing that I wanted to point out from what Kurt said is that he said that there's young people or new people coming to the space and they are providing a new vision with clear eyes. What we've been saying in Handcash all the time is that sacred cows make the best burgers, and it's kind of the way we've had to approach this, because there were a lot of things that like 12 words and all this complicated stuff, where we said, no, if we have to keep worshiping those old cows, we are not going anywhere.
Yeah, that makes a lot of sense.
And Zach, I think the utility is important too. You mentioned a database. I grew up in the database world, and today nobody asks the question, hey, are you using Cassandra or MongoDB, or are you using Oracle or Microsoft? They don't care. They just want to know that the application that they're using, either for an enterprise or consumer use, works. And if it works, so I don't really understand this whole debate of which blockchain are you using. It's religious dogma. As long as it works for what it works for, people shouldn't care. And I think, if we go back to the early internet, people didn't say, hey, are you using TCP/IP or are you using UDP? Nobody cares. It's the end use value that's created that makes the difference. And the companies that are building that take time because the infrastructure is not completely there yet.
I think it's important that the tribalistic part of crypto is something that it's more important that we gave it importance at first. We thought that we could overcome it because our technology is so far superior, whatever, that we could overcome that. but the reality is that you see that the same basic app or whatever being used under another ticker, even if it works 100 times worse, it can have way more traction than on BSV, and we've seen that with a couple of projects that unfortunately had left BSV to another network, which they say, this is Solana, but the network sucks. And we saw that a few days ago, it was like 48 hours down, all the network. I mean, it's incredible. I wouldn't build on top of that, but the tribalistic nature of crypto in the early stages is kind of important because in the end, you are using some specific assets to move value around this and that, and it's that drive that creates this kind of free marketing to expand your product in these early stages with something that's very niche and very for early adopters. And the problem is that when you have all these many coins, it creates this kind of silos where these people don't want to try out the products of these other people. They just want that product to also work on my tribe. And it's something that's very stupid. And I think ultimately is going to fade out and is going to get pretty old at some point. But it is something that we have to take into account for current products. But as Mike said, that from our perspective in Handcash, the technology is so good that we know that you can have a rush of a lot more users with another network today, but the problem is that you cannot build the things that we are building today in any other network, and we don't see any other network that can offer us the same reliability, scalability, and I don't know. It's a no-brainer for us, despite all the branding issues, which I think they are a bigger issue at this point than people might realize. But they are. You can tackle them from multiple angles, and it's not such a big issue anymore.
Yeah. So in that vein, talking about different products, I think if you looked at venture dollars solely as kind of a proxy for as an ecosystem succeeding, there are many crypto and blockchain ecosystems that are succeeding more than the Bitcoin SV ecosystem today, which is, from our perspective at Unbounded Capital, the only scalable blockchain that's out there today. And that's, not just a religious claim like I think a lot of folks in the BSV ecosystem have. It's an empirical claim, which is it's a blockchain that is getting cheaper over time as more people use it. At Unbounded, if there was another blockchain that came around that got cheaper over time as more people used it and were able to support awesome businesses like Handcash, we would seriously consider allocating to companies that are using that. And I imagine companies already in our portfolio would seriously consider using those technologies. But today we really just have one, unfortunately, and then a lot of really kind of inefficient by design, unscalable blockchains. So given that, despite not a lot of venture dollars, today the BSV ecosystem, from our count, is the second largest developer and entrepreneurial ecosystem in blockchain today after Ethereum. It's kind of neck and neck with Solana based on the public information that they share at Solana Labs about how many protocols and companies are built on top of that network. And I'm just going to drop something in the chat as we now keep track of all the different, maybe not all, but as many as we can, the product, services, companies built on Bitcoin SV today. So this is not something you have to trust me on. You can kind of check it out yourself and click on all the different links to see that these are real companies and products, not just random entries on a database. So today it's the second largest. How do you think it gets to be the largest ecosystem? Because despite doing a better job than most other blockchain networks of attracting actual entrepreneurs and developers, it still has a ways to go compared to the Ethereum network. And if we're being at Unbounded, our ambition is not to get to where the Ethereum network is to largely surpass that. So how do we get there? And how soon after do other VCs follow that? Okay,
so I think this involves some headhunting, and I think this is probably exemplified by what some of the things that Air Ventures are doing, and that is that they are, as far as I understand it, they are actively prospecting amongst, for example, the companies that have built on Ethereum. They're not looking for startups. They're looking for businesses that are are successful, growing, have real revenues, and are kind of rapidly expanding, but they're either but they're encountering scaling issues. And my understanding is they're actively targeting these companies, which are currently not on BSV, and they may not be kind of actively transitioning to BSV, but they're great companies. They've got a good product, but they may, they're encountering some kind of scaling issues. And this, I think, they're kind of trying to define as their kind of target-rich environment to thankfully go over and kind of scoop the converts, basically, create converts.
Yeah, that makes sense. Alex, what do you think of that approach, or is there another approach you think that will get the ecosystem there?
I think over time it will be clear that if you don't want to build on sand, as Jimmy Wins usually says, that BSV is the best option. The other ones are pretty experimental and they're failing all the time. And I think over time we are going to have all the tools necessary for developers to actually offer products to a lot of companies that are already successful, instead of trying to appeal to new developers that don't know what to build, or they are already very. I think actually trying to convince people who already have something on Ethereum, even though they know it doesn't work or it works very poorly. I think that's much more difficult than approaching a lot of companies that handle payouts, or they have online casinos or these kind of sites that they know the limitations of the current traditional payment systems. And when they see the benefits of something like BSV, I mean, it's great for them. And they always say the same thing to us, like, let me know when you offer USDC or BTCs or whatever on top of this technology. So if you want to embrace that irrationality, because for whatever reason they want that for their business instead of the BSV ticker, I mean, you can move all of these assets on top of BSV and make everybody happy. And I think that's something that's going to happen this year. And once the ecosystem has these tools for convincing these companies, they see the benefits of Bitcoin and crypto, but they don't want to maybe close their audience to the tribe of BSV, which is again important. They would be willing. There are a lot of businesses that are open to accept crypto, but when you're saying that no, the only crypto you're going to be accepting is this one, BSV, which is like the number 60 on CoinMarketCap, then the deal falls out. So you can still use the same technology underneath and for all the efficiency, and embrace that irrationality for a while until it becomes obvious that you don't need all those layers.
Mike, a question for you. What to start off with, what historical parallels do you see between capital allocation to previous technology innovations? Notably, say, databasing, the internet, compared to today with allocation to companies using crypto, using blockchain.
Yeah, I mean, and I think crypto and blockchain, we can't even define it, right? Is it crypto? Is it blockchain? Is it when you talk about is it digital assets? People are confused because the terminology doesn't represent it accurately. I mean, is it a token? Is it money? Is it a protocol? Is it a store of value? So we're comparing apples to oranges. So I think the first thing is important to understand is, what does BSV do better than everyone else? And for me, the biggest issue is the micropayments and what Handcash is doing. So you can't use any other chain to pay sub-cent payments anywhere. It's just not possible. So I just wanted to sort of finish that last topic. And in terms of parallels, I mean, it's very similar to the .com era. Back in 1997 and 99, people said it was impossible to nobody's going to buy a book online, right? Borders Bookstore was a publicly traded entity. This Amazon thing, who's going to buy a book online? You like to browse it, you like to feel it, you like to look at it. I mean, famously, people said that maybe there's room for 4 internet computers. Not really understanding that client server and telephones and iPhones were coming into the paradigm. You look at the first wave. There's a lot of ridiculousness, kind of like what we see with NFTs today. There were pets.com. I keep the pets.com logo that I have from 1999, and I hang it on a noose on my wall just as a reminder of how crazy it gets. But if we look at today, we've got online pet delivery companies that are publicly traded and valuable. So I think the hype cycle always comes first. And I think if you look back to the early days of the internet, there was a lot of money being flown, being spent on things that really had no, I used to sell internet infrastructure, intranet software. And at the time, you allude to this a lot, Zach, people spent lots of money on we're going to develop our own intranets. So the New York Times had their intranet. Every tech company had their intranet. Nobody ended up using it because the public internet was much more efficient and global in nature, and you could reach customers and even your own employees better. I think we're seeing a similar thing now with blockchain. So there's going to be a lot of money lost. I mean, we're already seeing, do I think Bored Apes are worth $1 million? I don't think that's going to end well. So I just think that, if we look at, I don't know, I take a long-term approach to this. I think there's going to be a lot of money lost, and 90% of these altcoins are going to zero. But I think from just like in the .com era, when we had Google and Amazon and all these other companies rise out of that, I think we'll see the same thing here in the blockchain world. But there's a lot of dislocation that happens between here and there. Money's not always spent wisely, and it's hard to be contrarian. I mean, it's really hard to be contrarian because people will tell you. I remember when I first started buying Bitcoin, my friends laughed at me. They were like, "You're wasting your money. This is the stupidest thing ever." I'm like, "Yeah, maybe. I don't know." But I think, anyone that tells you with certainty they know how the future looks, I have a tendency to not trust.
I'd also just add that I don't think it helps to be complacent, though. Even if we're predicting that this tipping point will be reached eventually, I think it's sort of an all hands on deck. It's in all of our interest to try to do everything possible to accelerate that, because I do think that there are some serious risks. If you think back earlier to the videotape format wars, between Betamax and VHS, for example. Those went on for kind of almost a decade, from the late 70s to the early 80s. And that was an example where arguably the Betamax had a superior quality product, but they were ultimately lost to VHS from JVC. That had to do, JVC was more aggressive. They were smarter about marketing. They kind of open licensed their products kind of broadly to a bunch of different manufacturers. It kind of led to sort of accelerated price declines. They were able to capture kind of early market share and kind of really drive a wedge that kind of ultimately kind of led to their victory. So I think we don't want to become victims of, the good enough, because as much as we can dismiss Ethereum for the stupidly expensive gas fees and, the outages, the network outages of Solana, I think we have to still, we want to try to be aggressive because, Ethereum is shifting to proof of stake. That will reduce their gas fees. Maybe Solana will get their act together and kind of more or less achieve some level of stability. Now, obviously, any account-based system can't achieve the ultimate scalability of BSV, but if it's good enough, it's going to be an impediment to kind of further headhunting of kind of moving really great companies, which may about to encounter scaling issues to BSV. So what's it going to take to move some of those great companies over? I think it takes some venture dollars and aggressive kind of headhunting, but also, as Alex I think commented, the fact that the BSV ecosystem is kind of expanding rapidly. There's no need to reinvent the wheel. A lot of these, the fact that there isn't this great existing network of basic kind of BSV infrastructure companies that have already built a lot of great tools. I think that there will be other kind of non-BSV businesses that can be more or less kind of plugged into a lot of the existing infrastructure, so that groups like Handcash, and other unbounded portfolio companies can become, either business partners or service providers to, some new targets.
Yeah, I mean, I think, Zach, one other, I've used this a lot in our calls, but the other historic parallel I would draw would be the cloud. So 15 years ago, 20 years ago, on-prem solutions in the enterprise were all anyone was talking about. No one's going to share their data for customers and for important information on the business in the cloud. And I looked it up. Amazon started S3, Elasticsearch, in 2002. It was an incomplete developer system. It was expensive. It was very hard to store data. And I just looked it up this morning. The cost to do a gigabyte of data on AWS today in cold storage is 0.00099 cents. And so when they started, that wasn't the case. And the parallel that I would say is every single asset on planet Earth can be tokenized on a blockchain. And because that data is immutable, it means that data is only going to grow. So it's stored for all time, whereas the first internet, it wasn't. There was a lot of data that was lost and archived and deleted. But if it's an immutable database, it's there forever. So the volume of what's possible in the future, not just tech, but real estate or deeds or ownership of registration of cars or houses, every single piece of data is there forever. And so when I look forward, and the reason I get so excited about this space is I just see the same trends that I saw with the internet, but at a much greater scale. And when you bake in identity and you bake in payments into this, it just becomes it's a new internet is what it really is. So I think that's just something that a lot of people don't really understand. And then the other aspect of this, maybe it's more future, but I come from a search background. I think Google is vulnerable. Google, when they do their search index of internet data, it's static data, and they use this thing called link flux, which compares the value of a site is based upon how often it's visited, as opposed to the actual meaning, the relevance of the content. So today, when you look at the future of search, I think it's vertical. A doctor has different medical terms than a layman. And I also think that a lot of the data that's coming is through Reddit, through a blockchain. And think about the search and indexing algorithms on the blockchain. It's very hard to find, but they're all timestamped. They're all there. It's also metadata. There's video. There's AI that can be used into this blockchain. It's going to make Tencent and Google's data repository look tiny. So I think, one of the things that I don't think people fully understand is, it's going to be dynamic and it's not as static. And I think search and pointing and indexing and finding information is going to be a huge industry in the future.
So we've got a bunch of audience questions and comments now. I'm going to start with one on, how do we promote, tech education? And I imagine this is kind of like, how do you promote the idea of, BSV being a good scalable blockchain, or even just that businesses should consider building on blockchains that grow and scale rather than ones, that are just getting a lot of the VC dollars today or have lots of tokens built on top of them. So I'm just going to, jump in here with a little bit of, I'd say the way that works out about at Unbounded, which is trying to, do more showing than telling. So rather than, just telling everyone, here's why this thing is the best. And of course, we have our materials and book that kind of details why we think that, the approach of Bitcoin originally has so far been kind of the blockchain most likely to get adoption and get data and transactions on it compared to other competitors, but really just showing the folks that are using it and what they can do. So like if you look at, for example, what happened on, with the Bored Apes real estate sale, or whatever you want to call the virtual land sale, 2 days ago, what you saw is that this cost 100 million in gas fees on Ethereum. This would probably be something in the order of, maybe 1,000 or, the thousands of dollars on BSV today. So it's Dave or Jack, if one of you guys want to jump in as your,
it would be $10.
It would be $10. Yeah. So there's, we could talk about theoretically why things are great, but ultimately I think there's a lot of empirical evidence like that it today is just working. And I think rather than trying to get builders to understand why this will work in the future, that's kind of what we had to do maybe 3 years ago. But we're beyond that point now. And a lot of things just work really well today on the network. And just kind of pointing folks to that. I know Jack, do you want to chime in with a little bit about the Substack that you have? Maybe drop a link in for folks, because I know you're writing about this on a pretty regular basis. Oh, you already did this. Okay, cool. You want to tell us a little about the Substack?
Jack here. I'm also a partner at Unbounded, and I started a company called Nifty Jigs, which does NFT technology on BSV. And very happy to be a listener and not a presenter in this webinar. Great panel, everybody. I do have a lot of perspectives though on these questions, and I've written a lot about how I think BSV will gain adoption and what entrepreneurs and investors maybe ought to do to help encourage that to happen more quickly. And I posted a link to that Substack, adoptingbsv.substack.com, in the comments. So give that a read if you're interested in this subject. Thanks, Zach.
David, you asked about kind of the regulatory element that enters after the debacle. Can you maybe provide a little more color on what you're looking for comment on there?
So I think it was addressed to a certain extent by Alex, but I think we're just looking at typically after the debacle, basically a lot of money gets lost and investors are kind of on the sidelines. Usually the regulatory element comes in after that and attempts to put some guardrails in. Some of that may stymie innovation, but theoretically it's for the advantage of the investors who lost a lot of money. But Alex, do you have additional thoughts on that though?
I think the most wonderful thing about this technology is that a couple of guys in Spain can say, hey, can I create a global financial system that just kicks Visa's ass? And it's very cool that you can just plug into this network like it was tap water or something, and you can get started. And I fear that if they start adding the same financial regulation, I don't think that there's a technology problem with Visa per se. I think the problem is that there's so many layers of regulation that they have to comply with, and with what's the name of the and compliance checks and background checks and see where the money comes from and money laundering laws and all of this. And I think those are kind of reasonable, but those have to be adapted to crypto in order not to hamper what's good about crypto, because otherwise you will end up with the same costs, with the same delivery times of transactions from one side to the other, and you're just calling it crypto instead of Visa, but it would be exactly the same thing. So I'm seeing a trend where the same financial mindset. I don't want to talk about the regulation. I think the regulation always changes, but the mindset, it's like when you're using the legacy payment systems, like bank accounts, fiat, whatever, it's like they're treating everybody as a terrorist by default. And it's so hard to do business or to open a bank account or to, just do a simple payment from one place to the other. It sometimes takes like 5-10 business days. You have to call the bank. You have to sign tons of paperwork. And I think we should try to avoid crypto becoming that, because otherwise it doesn't matter how good the technology is, because the regulatory part will hamper our ability to, we have a lot of businesses that they only have to get our SDK. They don't even need to know anything about Bitcoin or crypto. They can just get started and have a very simple game where people pay like 5 cents to play a game, and then it gets split between all participants or the best players. And they can do that in an afternoon without having to ask for a license or open a bank account in Switzerland with a special deal or whatever to become a bank. I think we shouldn't overlook that. Or I think, to put in another perspective, I think too many people are asking for the regulation to come very quickly, and they just want everything regulated and everything outlawed. And I think that would be bad for creativity.
Mike, do you have any thoughts on, let's say the, trillions of dollars of digital assets and crypto kind of comes tumbling down? What do you think happens after that debacle, if that occurs?
History is any guide. Legislators will overreact and try and stifle things to a degree that will cause some pain. So I think anytime, especially if it's especially if the victims are mom and pop type people, then it'll be swift and harsh. If it tends to be hedge fund types, then it tends to be less of a public opinion issue. But I think having been through several crashes, anybody who's under the age of 30 has probably never witnessed this. The world is more interconnected today than it's ever been. So I think part of the problem is people think of crypto as an isolated sector. It's not. So when people need money, the first thing they sell is what's most liquid. And crypto happens to be one of the most liquid things. And then cash money, then stocks, then bonds, then real estate, you get on the list. So I think one of the difficulties is how interrelated, not only geographically, but technologically, the world is today in the financial systems. So I'm not, I don't want to be Dr. Doom here, but I think we're going to have to go through some difficult times, and only the best technologies that provide true value will be the ones that come through the other end.
Also, it seems like history repeats itself many, many times. I've been revisiting lately the autobiography by Henry Ford, and it's crazy how the automotive industry was purely focused at first in speculation. So people were building, they're using the car, the automotive machine or whatever as the automobile. They were using it as a buzzword for creating a lot of pump and dump scams, and they were selling they were promising that they would deliver 20,000 cars, and they ended up not delivering any. And it was just about pumping the stocks on the market. So it's kind of the same thing. And ultimately, there were some people that instead of focusing on speculation, they focused on service and providing a service. And those were the companies like Henry Ford's company that ultimately made this technology available to everyone and a benefit for mankind. And it's very curious to see the parallels, even in something like automobiles, are kind of the same with every sector. There's a phase where everything's speculation because everything's treated as a buzzword because it's new. People want to jump in early, they want to make money fast, but they forget about serving the customer. And I think ultimately it's inevitable that this sector is going to head into the service part.
I think from a utility perspective, I would really encourage everybody on this call to, and I'm not just doing this to plug Handcash, but I think use a Handcash account. Once you make a payment of a penny to somebody online, it's a bit eye-opening. And and then what you start to see is how that fact alone will change search, advertising, B2B commerce, the underbanked. I mean, just the fact that you can send a penny cost efficiently from person one to person two is incredible.
Yeah,
Alex, do your quick question? Do your wallets plug into bank accounts yet?
Not with bank accounts directly yet. We need a license for that. We are working on building ACH and open banking bridges to bank accounts. But right now we are only working with the only bridge we have with Visa with fiat payments are with Visa and MasterCard. And regarding what Mike was saying, we see that, there's a service that many of you maybe use that's called Pocket, or I use it all the time, or I used to use it all the time, which basically I could, get a link of anything that I want to read later, and I take it I add it to my Pocket read list, and it kind of creates a simplified version of it, of the article, so it's easier to read or whatever. So there's an entrepreneur that's called Joshua Hensley, and basically created like a Pocket, but you're using it with Handcash. And it's so cool because thanks to the blockchain and all the tools that we give through the SDK, you just pay a cent for storing a new URL, and he's saving the list of articles encrypted with your credentials or whatever, so only you can read it on the blockchain, and you can recover them, the articles, all the time. And the best of all is that if you start seeing, this alternate like Pocket, I realized one day that it was looking at all my browsing history. It had access to my to my passwords and everything, and I was like horrified. And I was like, I need an alternative that's more private, that's easier to use or whatever. And with Pocket, I mean, it's something that he built in basically one afternoon, and it's a microservice. You pay 1 cent, and he makes money. You get a great service, and I don't have to pay a $9 per month subscription to have something like that. I can just pay on the go. And I think if you add that to the New York Times, you can pay 10 cents instead of a subscription for. I just want to read an article. I don't want to subscribe to the New York Times. And they're leaving a lot of money on the table. There's a lot of companies that don't know how to monetize or are leaving a lot of money on the table because there simply was not any tool for actually making micropayments feasible on the internet.
Well, Mike, Kurt, Alex, any closing thoughts you'd like to share?
I don't want to come across as being pessimistic at all. I'm just super excited about all the cool things that you and Alex are doing and your other portfolio companies. Really, to reiterate, I think this is the highest conviction I've had in my entire investment career. I'm super excited. I think as long as you guys, you've done some great stuff, carry on. I think that the white papers that you produced are tremendously valuable to help educate the kind of greater world about the value of BSV. But I think, if that's kind of followed on by, aggressive headhunting across the ecosystem, I think that will, help shift the balance and kind of tilt the consensus.
I'm very optimistic about everything because I don't know. I just have to show, as you guys said, I don't know if it was you, Zach, that you are more than show than tell. I mean, we only have to show Handcash, and the cool thing is that we have entrepreneurs that are building all kinds of products. And when I talk to anybody that has an online casino or something like that, I can show a couple of examples already working in production, and they're making a lot of money to the owners, and they get convinced because it's obviously 100 times better in many aspects than the regular payment systems, and not comparing even to other cryptos, but just to what's out there. It's 100 times better, and yeah, I think there's a lot of people that are at this point we are still in early stages in terms of acceptance of this technology as something real for businesses. But I think once we start removing those mental blocks or mental barriers to entrepreneurs by showing them that they can really make money, and it's they don't have to be fearful of this technology, I think we are going to see this technology skyrocket in usage.
And I think for me, I like to simplify things to the lowest common denominator. And for me, the biggest aspect of BSV and what it can change is micropayments. So rather than talk about technology, scale, transactions per second, block size, all of that stuff, I just like to show what's possible with a world where micropayments are the de facto way to pay in a digital way. And I think, you just saw Elon Musk and Mark Cuban talking about putting Dogecoin into Twitter to stop all the spam. Well, all of us on this call that's Twitch. They've been doing that for how long? So I think we have a marketing problem. We need to be able to explain this stuff not in bits and bytes and not about technology. And like we used to say in enterprise sales, if you're talking about the technology, you've already lost the deal. It's the story, and it's the ability to use micropayments in a digital way across the planet. And that to me is the core message that I try to share with people that are not familiar with blockchain and BSV. Well,
Thank you so much, everyone, today for joining. Thank you to our panelists, Alex, Kurt, and Mike. This will be up on YouTube sometime tomorrow. And expect our next NFT webinar to be in a couple of weeks. So we'll keep you posted on that. But thanks so much for your time, everyone, today, and for joining.